business news. Giles Beckford.
Thank you, Susie Atamari. In the news this morning, northern firms start to show debt stress, hydrogen fuel set to hit the road, and the latest from the financial markets. Businesses in the north of the country are showing high levels of debt stress as they feel the pinch from lockdowns. Credit reporting firm Centric's latest survey shows Auckland and Northland have increased debt stress compared to the rest of the country. Business defaults on loans are at 18% in Auckland, 12% in Northland. And Centric's Managing Director Keith McLaughlin says uncertainty is hampering small businesses and they may fold.
The companies that are really have their backs to the wall, and it's mainly the small enterprises, the small businesses who may struggle to survive. And I noticed that the Auckland Chamber of Commerce recent survey said that 20% of businesses expected not to survive the lockdown. So those ones obviously could almost be casualties of the lockdown.
The new business registrations were also down 13% in October. The Taranaki-based energy company plans to build a chain of green hydrogen fueling stations to support the rollout of 20 hydrogen-powered trucks. Hearing Energy is investing $15 million, $16 million of which is coming from a government fund. It will build 4 stations along key transport routes in the North Island. The company signed a deal with a US-based hydrogen vehicle company to bring the trucks into the country, and they'll be owned and leased by the TR Group. Hearing Chief Executive Andrew Clennett says this is a crucial milestone in decarbonising the country's transport fleet.
Really shifting the dial on decarbonisation in New Zealand and helping hit a part of the sector that's otherwise going to be really tough to decarbonise. So getting heavy transport addressed sooner rather than later is I think, really impactful. And so, yeah, definitely super proud of what we've achieved with our partners to get here, but there's quite a bit of mahi ahead.
Refuelling stations and the trucks are expected to be operational by the end of next year. Well, Genesis Energy's borrowed $100 million from Westpac, but it will be required to pay more in interest if it fails to meet emissions reduction targets. It will pay a lower interest rate on the sustainability-linked loan if it achieves its targets. The difference between meeting the goals or not is about $100,000. The company's chief executive, Mark England, says the commitments include reductions across all types of emissions and ramping up renewable energy generation. He says the company will continue to use gas and coal when it needs to back up the country's renewable energy network.
We're committing to decarbonise where we can and ensure backup is there when it needs to be as well. So just because we happen to consume gas and coal doesn't mean we can't do the right thing, and we can make a meaningful difference. Our strategy alone, taking 1.2 million tonnes of annual emissions out of the electricity sector, is probably going to make us the single largest contributor to carbon reduction.
And Westpac's head of sustainable finance, Joanna Silva, says the bank wants other borrowers to make a commitment to climate-related targets. It's earmarked $10 billion for sustainable finance up to 2025. Let's have a look at the markets now. Wall Street record territory, helped by some strong earnings reports. Dow Jones Industrial Average is up 0.4%, as is the S&P 500. A little bit lower for the Nasdaq, but it is positive. Our own top 50 index fell 38 points yesterday, just below 13,000. New Zealand dollar taking a bit of a fall across the board. 71 US cents, 95.6 Australian, 52.1 British pence, 0.612 euro, 80.8 Japanese yen, 4.54 yuan. Brent crude oil is a touch lower, and gold is also down just a few dollars. And should note that the Reserve Bank of Australia left its cash rate steady yesterday, but signalled that it's dropping its bond buying program it's keeping the bond buying program, but it's stopping its targeting of low interest rates.